Good morning, everybody. It is 9 a.m. and my name is Gareth Soloway with verifiedinvesting.com, and this is your game plan. So here we are again. It is Wednesday morning. Yesterday we saw some major action throughout the course of the day. We saw stocks ripping higher. We saw crypto ripping higher. I'm going to cover everything you need to know here on the charts, on the data. What the heck is going on? How do you trade it? Let's get into the game plan. All right, so number one, yesterday we saw the JOLTS number. Now, the JOLTS number is basically how many job openings there are in the economy. And everyone was expecting a 9.6 number, 9.6 million job openings. Now, again, that's what the market was pricing in. It came in around 8.8 million. Much, much, much less than expected. Now, you might say, well, that's bad for the economy. You're right. It's bad for the economy, but you know what? It's great because the Fed has been so hawkish in Jerome Powell's conversations or speech last week from Jackson Hole and also from the Fed minutes the week prior. So a hawkish Fed means the market wants weak economic data. They got weak economic data. We saw the markets ripping higher. Now the dollar was falling. So as soon as we get weak economic data, what ends up happening is that yields begin to drop. The 10-year, we're going to go over that chart in a minute. And then the dollar falls. When the dollar falls and yields fall, the market breathes a sigh of relief. Remember, dollar falling means generally we're expecting easier monetary policy, aka money printing. All right, now we're not at that point yet, right? I mean, let's be fair. We're not at money printing yet, but it's the beginning stages, and that's why the market loves it. All right, so again, yesterday, the JOLTS number was key. This morning, we got ADP private sector numbers. They just came out at 8:15 a.m. Eastern time. They came in 177,000. Estimates were for 200,000. Now, that's a slightly weaker number, so it's somewhat reinforcing what we saw yesterday from the JOLTS number, but the previous number from last month on ADP was revised higher. So I would say that number, because of the revision higher from last month, slightly lower this month, they cancel each other out. It is not a big event. All right, lastly, I just want to talk about this. GDP came in. This is the second read. So every quarter, we get 3 reads of GDP. We get first one, which is preliminary, then the first revision, then the second revision. The second revision was today. So it's basically when they finally get all the numbers in and they can really see the data. It came in at 2.1% GDP versus last read was 2.4. So that's a slightly weaker number. So overall, we had an ADP number that was neutral-ish and then a GDP that was slightly weaker. What's that mean? It means the dollar is likely going to go down and we're going to see yields also probably pull back. So let's jump right into the charts here. This is your daily chart of the DXY. This is the dollar chart. Very, very important chart because, again, the markets have been struggling because the dollar's been going up so strongly. Now, you see I have a trend line back here, right? So if we go back here and I zoom out, I'm going to show you where that trend line comes from all the way back here. And what we can see here on the trend lines is that in general, bear with me here, in general, what we've seen is that the markets have continued to kind of price in a dollar that was rallying recently, okay, but again, ran into resistance. Now, we're starting to see a pullback right here, and I want to just zoom in on that period because I do think it's worth keeping an eye on. So if we zoom in on this, we can see that the dollar, okay, the last couple days, so this was where we hit, which was basically on Friday of last week. That's a doji, by the way. Dojis are generally reversal signals after a long move up. It's basically a tail at the top or a wick at the top, tail at the bottom, and a close in that middle portion. That's a beginning signal. It's not as powerful as a topping tail or a bottoming tail or a reversal engulfing candle, but it still can show you that there's a potential reversal taking place. And then we saw Monday a small pullback in the dollar, yesterday a massive pullback, and today we're seeing another drop in the dollar. When the dollar is falling right now, when the dollar goes down, markets generally want to go up. All right, it's that inverse relationship. Now, there will be a point in the future, further down the line, probably 3-6 months out, where a fall in the dollar when we get into a recession becomes a negative because people start to get so scared about the recession that a falling dollar just signals a worse and worse recession. That's not where we are right now. Right now, we're in this zone right here. Dollar weakness is market strength. Okay, So that's your little update on the US dollar. Now, where would the US dollar pull back to? Let's talk a little bit about that. Like, how low can the dollar fall in the near term? Well, for me to do that, basically what I'm going to do is go back to this chart here, which we were just on zoomed out on the DXY, bring up my trend line, and we're going to start from the same base point down here, and we're going to drag it to this low here. Okay? Now, what that does is it gives us a band to look for maybe a pullback to about 100.45 on the dollar in the near term. Again, if that does occur, it could be bullish for the markets in the near term. All right, on we go. Let's take a look at the 10-year yield. The 10-year yield, again, has been worrying investors because, again, it's been bubbling up against this double top level here. So, again, we know that back in October of 2022, when the markets were down here, the yield was up here. And that's why the markets were selling. People were nervous about the yields continuing to go up. It was insinuating a market where the Fed was going to have to continue to hike. Now, what we've seen is we've seen this full circle where we've come back to a double. This is now what's called a double top. We hit that level. That's known as resistance in technical analysis. Now, look, we had this pullback, a couple pause days right here. Then the JOLTS number dropped us, and we're dropping again on that GDP number. All right, these things in the near term, again, a lower pullback or a pullback in yields is a signal that the Fed may be less aggressive in hiking rates. They might even be done. I'm in the camp where I think they're done raising. I do not think, even though just last week after the Jerome Powell speech, the markets were pricing in a November rate hike, I personally don't think that's going to happen. And especially now that we've seen the JOLTS numbers come out and we saw the GDP revision down. We have PCE tomorrow, which is an inflation gauge. Let's watch that. Does that come in hot on inflation or cool on inflation? And then the Friday jobs report. The jobs report on Friday, right? So we're looking at the jobs report on Friday. That is going to be huge because that, again, is going to reinforce what we're seeing from the JOLTS number and maybe from some of these ADP numbers that came in a little bit weaker today. Or is it going to be a strong number and it's going to erase that? If it's a strong number on Friday, the markets are going to drop because then the Fed rate hike goes back on the table. Okay? So again, that's what we're looking for there. Now, in terms of the yield, where is it going to go? Well, short term, we have support right here. So, I mean, really right around 4%. My guess is short term, that's where we're headed. We're headed right back to the 4%. Now, in terms of the bond market, a pullback in a week from 4.33 to 4%, that's a huge move. The way things have been in the last 12 months, not that big of a move. But in general, this is known as an epic pullback. Look for support around 4%. That's, again, going to be your level of interest. All right, we're going to go through some other charts, but I'm going to jump over to this board here because I want to cover crypto real fast. Then we'll get into the stock market and various stocks out there. I want to look at gold as well, so we'll look at that. But yesterday we had the Grayscale news. So basically another loss for the SEC. The SEC's getting pummeled, guys. I mean, again, I don't know what the heck's going on with them, why they're bringing these suits. They have to know that there might not be a shot at them winning. So I'm not really sure why they're going after it, but it just starts to look bad when they keep losing. They lost the Ripple case. Now they're losing the Grayscale case, right? And ultimately, this is pushing the crypto markets to believe that a spot ETF is more and more likely. It's shifting that probability further and further. I think a spot ETF is coming, and Grayscale basically is confirming that. So what did we see? Does this change the crypto markets? And the answer is no, it doesn't, right? So this is the kicker. Every time there's good news, you see the bulls in crypto, and I understand, right? Crypto traders and investors, they want to see the next bull market. They want to make $1 million out of 10,000. I understand. But you also have to look at the charts, and I'm a chartist and a dataist, right? Basically, we're looking at a chart here. So we have this longer trend here, right? So let me go over this. You have this trend line here, and you have this top trend line. That's what creates a wedge pattern, right? It creates this pattern here, right? And what happened was we broke down below 28,000. Now, that was a level I was talking about for literally a month prior as being a major pivotal level. It's this upsloping trend line from here to here to here. This broke. Now, if you've listened to my game plans at all, or if you know my methodology, if you've taken the Winning Trader series, whatever it may be, what you know is that there's a tendency for breakdowns to occur, and then you get a retrace to the scene of the crime. All right, the scene of the crime being the level it broke from. Now, that's exactly what we got here. And again, this was very important because it retraced right to 28,000 and change, hitting this pivot point right below this upsloping yellow line. Now, it's still possible we could go up and test the yellow line somewhere up here, but ultimately, unless Bitcoin, and this is just facts, guys. And again, I understand crypto Twitter and so forth doesn't want to hear this, but I'm just a chartist. I'm just giving you the facts, or at least the probabilities, right? And the probabilities say that unless we get through this area here, which is now 28 to 28.6 or so, then you would favor the downside, okay? If it gets through this area, it can reattack this 31, 32,000 level, maybe then breaking out. But what I always say to you guys, and is so important, is respect support, respect resistance until it is broken. All right, our hearts, our emotion, they always want us, they always push us to say, oh, it can break, it's going to blow through this, it's going to go here, it's going to go. But in essence, what it comes down to is resistance until proven otherwise. And that's what we're saying here. So you have to watch this 28 to 28.6 level. That's going to be the key on the chart. Now let's flip over to Ethereum here. So if we look at Ethereum, right, same kind of deal. Let me just erase these lines so we clean out the chart for everyone. So here's your Ethereum chart. And again, Ethereum had much the same breakdown. The only difference in Ethereum here is that it made a lower low. All right, so again, just flipping back to Bitcoin real quick, is that Bitcoin, if you look here, this low never got taken out by this low. So technically speaking, at least Bitcoin has that going for it, is that it has a higher low still intact. But if we flip over to this chart of Ethereum, all right, we can see, and I'm going to zoom in again, we can see here, guys, that Ethereum made a low here and it made a lower low here. Now, it's still got a bounce, but basically the same thing applies, that on the bounce, unless you recapture this line, this is just a retrace after an oversold situation on Ethereum. All right, so again, just understand that. That's really important. You're looking basically at 1850-ish, give or take, as your level that it needs to get above for Ethereum to recapture this level. And then honestly, then you have this trend line too that you're going to have to run into, right? Pivot high here to pivot high here, and that's at just above 1900, right? So resistance 1, resistance 2, if it gets through there, then you can retest the double top at around 2100 and change. All right, so the other crypto I want to go through real quick is, so, you know, for those of you that know, I run a service called Verified Investing Crypto, and it's at verifiedinvesting.com. That's where you can find it. And I went long about a week ago when we dumped out on a lot of these charts. I went long some altcoins. I thought altcoins were overdone. I love the levels on something like Ripple, on Litecoin fell a lot. I mean, a lot of these charts. So yesterday I did take profits on one altcoin, and I want to explain my thought process here because I think it's very useful. So again, what I want to do here is quickly just look at the Matic chart, and we're going to look at Polygon, which again is Matic. And if we flip to Matic, what we can see is that it was essentially at double bottom. So again, double bottom down here, and it's hard for me to show. Let me just zoom in a little bit here. All right, so there we go. So basically what you had here is a low on it here, and this is going back to June, the June low, and you were reattacking it down in this range. So I said to myself, listen, we just flushed through. We almost hit 25,000 on Bitcoin. The RSIs are ridiculously low. You're probably going to get a bounce. Now, remember, I'm a swing trader, so I'm in and I'm out. And that's exactly what we got yesterday. So while I had I have about 4 positions, small positions in altcoins, or maybe even 5, what I did was I took Matic off in terms of profits. Now, so far, that was the smart decision. The alert went out around 63 cents right up here. It was about a 10+%, almost 11% gain on Matic. But let me explain why. So as a trader, you have a certain amount of positions in your portfolio. Now, the retail mentality is to hold everything and try to make a fortune. That ends up in a broken account or essentially of going bust. You blow up your account when you try that. The pro, what they do is they say, hey, listen, I have 4 or 5 positions that are now all in the money by 5 to 10, 15%. Let's start inching out of a little bit. Let's protect our gains. Let's take some of those gains off the table. And that's what I did. It has nothing to do, and this is the key, it has nothing to do with Matic particularly. It just happens to be that one was up almost 11%. And it was just like, you know what? I still have Cardano, I still have Ripple, I still have some Litecoin, etc. So let me take a little bit off the table. This way, if it falls back down, if crypto comes back down, I can re-enter, or at least I pocketed some profits to offset if I go into the loss column on those others. And this is the mentality that we need to get to as a group if you're going to be a pro and if you're going to make millions. All right, I do the same thing in stocks. I might have 10 shorts or 10 longs. As we get in the money, I take 2 off the table there. We get a little bit deeper in the money, 2 more off the table. A little bit deeper in the money, 2 off the table, right? And so essentially what you're doing is you're always padding your gains and you're protecting against losses. Really, really important philosophy to do in investing. All right, so that's what I wanted to go over there. The last thing I want to show you guys is just something that concerns me on the overall market here. So if I flip over to this, well, this is earnings, and I'll quickly go over that. But basically, this headline does have me concerned for the overall stock market. And we're going to get into stocks now. This is kind of a transition over to stocks. But hedge funds, okay, have made a huge push into risky assets, risk on assets. Now, as a contrarian, so number one, in general, the retail crowd has this reverence for hedge funds. I've said this before, I'll say it again. There's about 3% of all hedge funds that are amazing. Most hedge funds are garbage. Most hedge funds do the same thing that retail does. They chase, they do this, they do that. They just have more money. That's the only difference. So maybe they don't get swayed quite as much, but they're not very good. So what I do is I look at this headline and I say, wow, if the big money is in these risk on assets, that actually makes me bearish, thinking that we actually could be topping out here again on the stock market big rally that we've seen. So that's just something I like to pass along to you guys here, is that when you see headlines like this, don't think, oh my God, the hedge funds, they're geniuses, they're long, I need to go long. You should actually be in the camp of saying, uh-oh, they're all long, all that money is long, that's all money that potentially can be sold. I need to be careful, and maybe I should pull back on some of my longs. Maybe I should inch into a few shorts out there. All right, so that's something I want to show. Lastly, before I jump to my other screen, I just had this out here. Here's earnings for the day, guys. Look after the bell for CrowdStrike, CRM, Okta, and Chewy. 5 below 2, but really I would say this one's probably your biggest one. This one's also going to be big as well. These aren't going to be market movers, but again, for those of you that are like me and we're traders, this is what I'm going to be focusing in on in the after hours and pre-market tomorrow during the day for what stocks are making moves. Okay, let's jump over here, guys. Let's get back to some other stocks here. I want to take a look. So what I want to show you real quick here, guys, is number one, we're going to look quickly at gold. Okay, so let's just quickly take a look at gold here because, again, this is a really important chart. So gold has continued to rally. Now, if you were watching this game plan just literally a couple days ago, you saw that I said, guys, buy gold. It's right back into this line. Well, look at gold, right? Now, the fact that the dollar's starting to fall and expectations for Fed rate hikes are dropping, that's very bullish for gold. Now, in all fairness, it's short-term extended. You're going to have some resistance right up here. But ultimately, I've been in the camp that this pattern, right? So you have this move up here, and then you basically have this consolidation pattern. This is bullish, short-term bullish, all right, or micro bullish off of this bigger move up. Now, in the scheme of things, if we look at the bigger pattern, right? So one of the things I do is I look at macro and micro pattern formation. So this is what I would consider the micro on the daily chart. All right, it's basically from October last year to current period. Bullish consolidation, looking like it wants to break out. Then I flip to my bigger time frame and I say, okay, what's my bigger time frame on gold? And we flip it over to this and I say, wait a minute, look at this. What we have here is up strong. And then look at this, guys. Basically the same sort of bullish consolidation. So as a technician, I'm seeing macro, which means big picture. This is on the larger time frame going back to 2019, bullish. And on the micro pattern, bullish as well. When you get bullish and bullish, macro, micro, very, very good. Very, very good. And by the way, it doesn't mean it can't pull back. But ultimately, I still am in the camp that this thing is going higher here on the gold chart. All right, that's gold. Let's flip on over. I want to look at a couple stocks here. Let's go to Apple. Apple obviously has had a big bounce here. Now, Apple's earnings were not spectacular. Their revenue is actually declining year over year, so just be aware of that. Having said that, we're in a bull market. All right, here's your Apple chart. Now, the thing to keep an eye on here is that what we're seeing is a chart, and bear with me as I get my trend tool drawing out again, is that we've seen a big bounce. Now, the question is, where does the bounce stall out? Like, where does this become an interesting short? And see this little pivot low right here, how it matches up right with this high of the gap? That's your first level of resistance, right around 188, 187. So resistance number one, this is resistance number one. If it gets through that, you have a gap fill right here at about 191 to 192. That's resistance number two. These two levels are where if you're a trader, if you're a swing trader, you're going to start looking to short the stock on Apple. Now, how do you manage your risk? Let's talk risk. Well, basically, you have a very defined high pivot here, which is just below 200. If you confirm above this high, you would stop out for basically a 5% loss on the trade. But my guess is it might fill this one, definitely hit here, might fill here, and then I think we start another leg down on Apple. All right, so there's your Apple analysis, guys. I'm going to go through a couple others here on the chart as we kind of get towards the end of this game plan. Nvidia, we got to talk Nvidia, guys, because the insanity here is pretty ridiculous. Impressive move, staying within this level here. Again, we had the gap up. I don't know why this candle's showing up as red, but it's actually, I mean, green. It's actually supposed to be red. But either way, we are opening up a little bit higher so far today, right up here. This double top at 502 is going to be your key trend line for today. And then if it gets through the aftermarket highs, all right, this is important. So most people don't think aftermarket highs matter. They do when there's volume. And after earnings on that day when they reported, they had a ton of volume, and we saw a high of basically 515 to 520. So there is a chance that Nvidia could go up there. So you have to be ready for that. You have to be ready in your risk analysis, is that if you're going to try to short Nvidia at double top at 502, you have to be ready for it to go and test this level. If it gets through that, then that's another story. It could be headed towards 600. But that would be your level to watch at this point in time. All right. Let me see what other charts I wanted to bring up. The only other thing I wanted to mention today, guys, is about a week and a half ago, I brought to your attention KWEB. KWEB is the Chinese ETF. And if you remember, right down here on KWEB, okay, this is where China lowered interest rates, but they lowered less than expected. And everyone was like, oh my goodness, this is horrible. And I came on this game plan and I said, guys, this is usually what I look for as a buying opportunity, right? When everyone else hates it, when you're seeing this, I mean, China again will come out in gangbusters. They're going to do what they have to do. And I'm not saying this is a long-term trade. I mean, who knows where it is in 6 months or a year from now. But I just want to show you from basically 26 and change, you're now at 29 and change, over a 10% move in a month, right? And the beauty again is you had lots of support right down in this lower range, and there you have it, right? So again, buy fear and sell greed. That's key. Make sure you keep your head level. Logic needs to rule. Charts need to rule. And let me flip back to this main camera here. These are the things that will guide you versus getting wrapped up in emotion that will put you on the stray path and ultimately cost you money. So again, listen, there's no perfect solution out there. You're never going to be 100% winner in trading. I don't care if it's crypto stocks or commodities. The one thing I do know is you can get the odds in your favor if you learn how to read the charts and you take emotion out. Emotion is your undoing. All right. So in any case, here we have it, guys. Thank you for joining me today on the game plan. I will be back tomorrow with more alpha, more chart analysis. Again, thanks again. Spread it to your friends. Follow me on Twitter. Follow me on YouTube. You guys rock. Thanks for tuning in. Take care.